What's going on, guys? Very bloody week for AMC this week. Minus 65% in the red this week. Not a big deal at all. We're in the middle of a macro retest. Very big deal. Retesting the macro breakout on AMC right now. Very bloody week. A lot of opinions and speculation going around. It's very simple what's going on, and I'm going to show it. I have a bunch of charts here. I have a lot to talk about in this video. So with that being said, let's just jump right into it. I haven't shown this in a while. It's been a while since I showed this, the full macro perspective on AMC. So this is from IPO. So this would be the equivalent of the January squeeze, this green dot right here. Come down, the equivalent of the June squeeze, the yellow dot right here. And then you get this V shape that you see here. It's actually a lower high right here than this. So a lower high right here. And then you get your macro break right here, the gap down, the W that plays out sideways, and then the rest of the pattern here. That leads you to the flat pattern. From there, you break out and you squeeze, and the cycle resets back into the January squeeze. So that's what we're looking for. It's been a while since I showed this. I figured I would just throw this in the video. One thing I do want to mention before I move on is that this previous macro took 8 years to play out. So, you know, a lot of people like to complain, oh, this is like, we've been in this play forever, this is taking forever. The macro that we're in right now is playing out ridiculously faster than the previous macro. This macro was from 2013 until 2021 is when you got your macro break and a reset into the new macro that we're trading in now. So 8 years it took for this macro to play out. And from 2021 until 2023, where we are now, 2 years, and we're already at the end of the macro again. So the macro, the current iteration of the macro, is playing out much faster than it did previously. And I've mentioned multiple times that's because volume. Volume will be relative to speed. There's much more volume here now in the current cycle than there was previously. So we're playing the iteration of the macro out faster. So this next screenshot is just showing the same thing I just showed you, but how I would normally show my macro perspective with the colored boxes here. Usually I would just show it from here, the downtrend, the colored boxes, the green, red, and blue. The 6 points that takes you to the flat portion where you have your 3 touches on the bottom, and then you squeeze from there. So the green, red, and blue, the flat portion, the 3 touches, and everything like that. And then we would now be in the retest. I should have probably shown that on the first slide. The ituration that we're in right now is this breakout and retest right here. And this is confirmed by further TA, OBV, just general tracking as a whole. We are in the breakout retest iteration, a very, very drastic retest here. But I mentioned multiple times the reasons here why it had to be. Number one, to retest this trend, it had to be a lower low. It had to be drastic to this effect, just because of the slope of this descending trend line here. It had to come down this low. Arbitrage, AMC and 8 meeting at the exact same price, which they did. Thursday after hours, AMC and 8 met at the exact same price going into the conversion on Friday, actually checking off the lower low landmark, triggering stop losses, shaking out last paper hands before we take off. This move makes perfect sense. That said, we don't want to form a lower low, an all-time low here. Absolutely do not want to see that. So just moving on, this is what the macro would look like when I have all my markers on it, and then this is what it looks like on a daily basis, just showing you from where the downtrend starts. This blue box here is your macro break. This blue box here is your macro break. The W that plays out, the W that plays out here, and then 6 points taking you to the end of the blue on both sides, and in both cycles trading in a descending wedge. And from the 6 point is where you break down to the flat portion where you have 3 touches on the bottom, 1, 2, 3. From there you break out and you retest the yellow box here, which is where we are now. Again, a very drastic move. I just went over the reasons why. Macro looks perfect. No complaints whatsoever here. Moving on. If you remember this, I have not shown this in a while. I'm coming back to it I want to talk about this. So this is the bilateral triangle that we were trading in for almost a year, the final iteration here. All 3 of your bottoms here, and this is the daily chart. So if you remember me saying we had this bilateral triangle here, we were getting very the support was meeting resistance here towards the end, very flat. This whole time we were looking for a lower low for our third bottom. This is the daily chart. There is actually a wick down on this candle right here to 389. which was not a lower low, but I speculated it was possible that was our third bottom. And it turns out it actually was. The wick down to 389 was actually the third bottom, and then we got we got towards the end of the apex of this triangle here, and we got the gap up that we were looking for, the breakout. So showing this chart updated, and here it is now. Not currently, but I just wanted to show the actual retest on this. So again, rejection, rejection, poke through there. We actually got halted here. Rejection, rejection, and then the support on the bottom, all three of your bottoms of the flat portion. Looking for the lower low here that we never got. 389 wick down pre-market. Was not a lower low. I speculated that was the third bottom. Turns out it actually was. So from there, you formed an uptrend. You broke out when the support was meeting resistance. You gapped up, got the gap up we were looking for, came down to retest on the bilateral triangle, confirmed, found a bounce off, and then from this point right here, we knifed drastically. And I want to show you why this makes perfect sense. So moving on to the next. Here is the macro descending wedge that we're trading in, the white lines. So that is the macro descending wedge. These blue lines is the chart that I just showed you, the bilateral triangle. We were looking for a gap up out of this bilateral triangle. So support meeting resistance here, getting very, very tight towards the end. Finally got the gap up. Here was that pre-market wick down to 389 I was talking about that we were speculating was the third bottom. We got the gap up out of this triangle, came down for the retest, confirmed it, bounced off, and then saw a knife. So if you remember me saying as well that this chart, the breakout of this bilateral triangle would coincide with the breakout of our macro, and it did. And I'm showing you that here where the macro pattern is this descending wedge here in the white. This blue bilateral triangle here, we actually broke out of the macro with this. So this breakout here, the breakout of this triangle coincided with the breakout of the actual macro. We came down to test the micro pattern, and we confirmed, and now we got the knife to come test the macro. So this looks perfect. Retest here, and now retesting the macro. We're at the end of our macro here. The next thing we're getting is a squeeze. So there's really not many ways this can play out. There's actually two ways this can play out. Fractally speaking, there's two possible scenarios here, and I'm just going to be straight up with you guys. Just complete transparency. And the second option, I do not think is the case. But fractally speaking, there's two ways this plays out now that we're at the end of the macro. There's no pattern left for us to track, as I showed you previously right here. There's no more pattern left. We got all the landmarks, all the touch points, we got the breakout, and now the retest. So there's two ways this plays out now. Number one, we squeeze. And very drastically so. It would be a move. My price target would be 1,400 currently. Top of the fib spiral, which is definitely a valid price target, would be roughly $2,600, $2,600 to $3,000-ish dollars. That is option number one. Option number two is we form a new all-time low and start heading towards zero, towards bankruptcy. And I'm just pointing this out. Just fractally speaking, there's two ways there's two ways this plays out. This is why I keep saying I do not want to see a lower low here, because that would mean that the current macro is in a downtrend. Forming lower lows on the new macro is not something that we want to see. What I mean by that is forming a lower low than the previous. We don't want to form a lower low than the all-time lows we saw on the previous macro. If we do, that's very, very bad news for AMC. I don't think we're going to. I'm just pointing this out. I'm just being transparent. It's squeeze or zero. That's the two options. We're not going to zero. I'm just pointing it out. Just from just strictly fractal studies, the two ways this can possibly play out. Now, again, I said this breakout of this triangle here would coincide with the breakout of the macro. It did. We retested the micro triangle, and now coming down to the macro wedge to retest. This looks great. Looks perfect. I want to show this now. The halts. This is not all of the halts, not even close to all of the halts, but some of the most important ones in my opinion. So obviously we got halted in January and June on the two peaks that we got. Here's the flag that we traded in, and actually, as I mentioned in my last video, this pattern here is the exact same pattern that played out in January. Same exact pattern. The only difference here being that we broke down from it into this descending wedge, and very strong support on the bottom, very strong resistance up top, and every time we got close to resistance, we halted. So halt here in March, come back down to support, bounce up, halt in August. Come back down to support, and then again halted in March, and just riding in the descending wedge here. We got the breakout we were looking for, halted on the breakout because we had to come down to retest the macro. I've mentioned multiple times the halts we're seeing on AMC are not malicious at all. Rather, they are to preserve the pattern, make sure the algo runs the course properly. We've also been halted to the downside. When downside was getting very drastic, we've been halted to preserve the pattern. The halts go both ways. We've been halted to the downside, we've been halted to the upside. The halts are just to make sure we are playing out the macro correctly. The algo is running through the macro correctly. So, just showing these halts here, I'm just showing you that this is the pattern. This is the pattern on AMC. This descending wedge here, the halts are showing it to you. The touch points, everything looks great. This is the pattern, and we are in the middle of the retest from the breakout here, and we are holding up on the retest, and I'm going to get into that on the micro in a little bit, but this looks perfect. Moving on. Now, I think the bottom is in, and I'm almost positive the bottom's in, and I'm just showing this because I want everyone to be aware of what's going on with, I went over the two scenarios. It's either zero or squeeze. I absolutely do not think we're going to zero. Not a shot in hell do I think we're going to zero. I'm just being transparent and just pointing out the two scenarios here that can possibly happen for AMC. Now, we absolutely do not want to see a lower low, a new all-time low in AMC. Again, I do not think we're going to. Not a chance in hell we do, but I'm just pointing this out. This white line here is the lows from last week. I believe Friday was the lowest point last week. I mentioned we'd be filling these gaps on the macro, all of the gaps to the downside. I'm not upset with seeing that whatsoever, preparing for a new macro. This looks great. This white line is the low of last week. Downside levels to look at. Now, as far as gaps go, gap fills go here, we filled all the gaps on the daily. So on the daily chart, all of the gaps to the downside are now filled. There are two more gaps, these green hashed lines here, 1122 and 1084. On the extended chart, extended hours, there are two more gaps, 1122 and 1084. I don't think we're filling them. I'm just pointing that out. Those are the next two downside levels to look for. Again, I think the bottom's in. I'm just pointing this out. And then all-time lows being 1035. This red line, we absolutely do not want to break this level. I don't think we're going to. And that's it. I just wanted to point out the rest of the downside levels. All the gaps on the daily are now filled. There are two more gaps here on the extended chart. I don't think we're filling these. And then all-time lows being 1035. We absolutely do not want to break that. Now getting into the retest. And here would be, where can I show this? Right here probably. So I've been tracking the flat pattern obviously since my time on YouTube. So since January pretty much 2023, my original tracking was a little bit off, little bit confused with landmarks, learned a lot since. But I do want to talk about, I've been following the flat portion, showing the EMAs, showing the RSI. It's all the same. We are very clearly running on a loop. It's all the same. This retest here, very dramatic retest, but the equivalent would be this here. This is your breakout and retest. From there, you confirm, gap up, macro fractal break, and squeeze. And we are in the middle of the retest. And here is my tracking that I had for it. And I went over this in all of my previous videos as well. While I was live streaming, I was tracking this on a daily basis. It looked great. Tracked this for a week straight. I literally drew the price action before it happened. That's how well this was tracking. But anyways, here's the January move on the left and the current cycle on the right. You get the gap up you're looking for. You get this crazy ass wick that you see here. Very high red volume on that wick, by the way. Come the rest of the way up to your top. Come down to the red, as you see here. You get the stair step move that you see here. You form this uptrend here. And then again, this is an old chart. We were looking for the gap down to this white line. That's what I was saying I wanted to see next, was a break of this uptrend and a gap down to this white line here, which is what we're looking for. This is the retest. So this is your breakout retest iteration on AMC in January 2021. So this gap up is the breakout. Play out the rest of the pattern, and this gap down is the retest where you confirm This is your confirmation move off of the confirmation of the retest right here. And then from the top of this, you gap up again, and that takes you a straight line into your squeeze. So this chart updated, here it is. So rather than getting a gap down to the white line here, and again, here's the uptrend, you break below the uptrend and then come up and reject before you get the gap down, which is what we did. So here's the uptrend, broke below, came back up to the trend, rejected, got the gap down. We were looking for a gap down to this white line, ended up gapping down much lower. And again, the reasons for that: arbitrage, AMC and APE legitimately met at the same price down to the fucking penny going into the conversion on Friday. So clearly that was always going to be the case. That was always going to happen. AMC and APE were going to meet at that price, met at the exact same price. At the same time, we had to come this low to retest this trend here. The slope of this trend, we had to come this low to retest this trend. We checked off the lower low for the third bottom we were looking for, albeit it was not in the spot we were looking for, but we have checked off the lower low landmark that we were looking for. And at the same time, anybody that had stops set, this is all-time lows on AMC, the flat pattern, the original flat pattern of the January cycle, anyone that had stop losses set here got triggered. So shaking paper hands out and triggering all the stops to the downside, completing the macro, filling all the gaps on the daily before we prepare for the new macro, what could possibly be the MOAS. So, where was I? So here's the retest, and we're in the middle of the retest now. So as I previously mentioned, this gap down here, this gap up is the breakout. You play out this pattern. This gap down here is the retest, your confirmation of the retest, the confirmation move, and then from here you gap up, macro break into a straight line for your squeeze. So here was the breakout of the macro, and I previously just showed that. I'll show it again. Again, here's your macro. Here's the breakout. We broke out of the triangle, and we broke out of the macro wedge. So again, here's the breakout. Here's the pattern that plays out from the breakout, and then the gap down that you're seeing for the retest. And this played out, it gapped down much lower than I would have liked to see, but it had to be this way. And the price action from the gap down is playing out exactly how we wanted to see it play out. So from the gap down, you get this uptrend that you see here, and then you get this downtrend to a lower low for your confirmation of your retest, coming down to retest the macro break. When this confirms, and I believe the bottom's in, so it should be confirming next week, we will find a bounce off and the rest of this move. And this is the confirmation of the retest, and then again, you gap up from here, a straight line to your squeeze from there. If the bottom is in, and I'm pretty sure it is now, we should be seeing this confirmation move next week. And I'm not sure if we get the whole entire move next week. I would assume that we would. This move would actually take us probably somewhere into the $80 to $100 range on AMC. As crazy as that sounds, this move would be taking us, because landmark-wise, the top of the breakout was $62. And this isn't even the top. This is without extended hours. This is more like $77 to $80 for the top here. This next move we're looking for will probably be taking us somewhere to $100 for AMC. Obviously, that's split adjusted, so that would be $10 more or less. So moving on from that, now getting into the actual retest. So what we're looking at here is the breakout, and we're in the middle of the retest now. This is the macro wedge here in white. So again, I have a bunch of charts here. Too much going on. This is the macro wedge right here, the white. This is the breakout, and this is the retest. So zooming in on the retest now, again, this is the macro wedge. Here's the breakout, and here's the retest. We are bouncing right on top of the previous resistance, acting as support. At the same time, all last week, just legging down every single day. Very bloody week, legging down every single day. There is a descending trend here. And Friday, towards end of day, we actually broke out of it, and that's why I went live on Friday for Power Hour, because we actually broke out of the descending trend line here, while also finding a bounce right on top of the previous resistance, now acting as support. So zooming in, here it is. Here is the descending trend. Here is all of last week, just legging down every single day, minus 65%. Here's the descending resistance of the retest. And here is the previous resistance of the macro acting as support in white. And we actually broke out on Friday, broke out very flat after hours. I'm expecting to find a bounce next week. I'm expecting next week to be green. So that's that. Really quickly, I'm going to go over the fibs again, the Fibonacci spiral. So this is a Fibonacci spiral pulled from all-time lows on AMC to all-time highs on AMC. And the touch points of this fib spiral are very, very interesting. Again, starting at IPO, the first touch is at the flat pattern, right where the flat pattern starts is where you find your first touch. So the original macro, the flat pattern. Then you get your January squeeze here, which actually rejects this trend, and you come down and bounce on this. I don't know if you could see, it's kind of blurry, but the January squeeze came down to bounce on this, confirmed, got the June squeeze, reject again the top of the spiral, come all the way back down, and now fighting for the resistance of the outside wall of the spiral. So the Fibonacci spiral is pointing at a price target of $2,600 more or less, and this is completely valid. My price target's $1,400. Just based off Fibonacci extensions. The Fibonacci spiral is pointing towards $2,600, $3,000 level. Zooming in on the resistance of the spiral now, here it is. This was that Friday 2 weeks ago. So here's your breakout. You can't really see the candle. It's cut off a little bit. So here's your breakout. Here's the retest of the bilateral triangle. You confirm off. And that Friday 2 weeks ago, after hours, where we got the knife, now coming down to retest the macro of the descending wedge, also rejecting the resistance of the Fibonacci spiral. So gap down there, climb back up, the climb we were looking for from the gap down, and then looking for a lower low from there, actually poking through the fib spiral again. And then this was all this week, just absolute fucking blood. All this week, reject the resistance of the Fibonacci spiral again, and finished up the retest. So again, I'm looking for a breakout of the spiral here. And that break, in my opinion, will be aligning with our squeeze. Almost undoubtedly, that break will be aligning with our squeeze because we are in the middle of our retest here. Show it here. That yellow box is kind of annoying. So right here. So here it is. Here is the retest. The macro is over. The macro is completely done. And if you remember me saying multiple times, the reverse split and conversion is the catalyst for the squeeze. And really quickly, I just want to read this because everyone bitching and whining about dilution, it has to be a psyop. It's either it's bots or people are just really that stupid, or it's just a Wall Street psyop, just program retail to think dilution's bad. Let me just read this for you. AMC issued new shares in January 2021, diluting the float, and the stock soared. January 2021, the initial squeeze. Dilution, we squeeze. In June, again, after issuing more shares, the stock went up again. So dilution, January and June on AMC. January and June 2021, dilution on AMC, we squeezed twice. The stock went up again. In July of 2021, as requested by shareholders, AMC stopped issuing shares, and the stock has plummeted since. So since there has not been dilution, we've seen nothing but red. So we saw dilution in January 2021, we squeeze. We saw dilution in June 2021, we squeeze. July 2021, shareholders request we stop seeing dilution, and we've been nothing but red since. Now the reverse split and conversion has gone through, and Adam Aaron can dilute the float again. And again, the reverse split catalyst is the reverse split and conversion is the catalyst for the squeeze. And the reverse split went through on Thursday, conversion went through on Friday, and I'm not the fundamentals guy. I don't even read this shit. Took me 2 seconds to Google that. I know dilution is not bad. Dilution is not bad for AMC. I'm not the fundamentals guy, but I believe sometime next week Adam Aaron is allowed to dilute shares. I'm looking forward to that, as should you be. I don't know what day it is. I don't know if it's next week for sure, but now the conversion has gone through. Adam Aaron can now dilute the float, and that is good for us. Really quickly, one last thing before I finish the video here, and I showed this in my last one. The you are here Volkswagen chart, yeah, you are here. So here is Volkswagen on the left and AMC on the right. Here is the baseline, this red trend on Volkswagen, the baseline on AMC. This would have been the equivalent of the Volkswagen flat pattern here, the January squeeze in the red. As you see it here, the flat pattern, the January squeeze in the red. Come down, June squeeze, come down, June squeeze in the green, and then just straight red from there, coming all the way back down to the baseline, but forming a higher low, which is exactly what we're doing here. Again, Do not want to see a new all-time low in AMC. I don't think we're going to. I think the bottom's in. I went over all the charts, the retest and everything. Came all the way back down to retest the macro descending wedge. Find a bounce on top of it as support. Here's your descending trend of the retest, and actually broke out of it on Friday. That being said, August 29th is 7 trading days post OPEX. That is next Tuesday. I'm just going to say that, and I'm going to leave the video there. I'm not saying we're squeezing on August 29th, but the OPEX dates cannot be ignored. Both January and June squeezes, the peaks of them, landed 7 trading days post OPEX date. August OPEX date, 7 trading days post, is August 29th. I'm just pointing that out. The next date after that is September 26th, I believe. That would be the next 7 trading days post. But we are at the end of the macro here. So I'm expecting things to get fucking wild soon. Very soon. And again, the confirmation of this retest here, we're looking for a move to about $100. Somewhere from $80 to $100 here. That would be the rest of the move up, and then from there would be a gap up macro break into your squeeze. Not saying it has to happen next week, but that is what we're looking for next. So with that being said, that's the video, and I'll catch you guys next week.